Are ready, Joshua, you can begin to introduce the event, my brother.
Okay, ready?
Yep.
Perfect. Welcome, everyone. So, thank you all for coming out today. My name is Will Cotton. Thank you, and we want to invite you to another Grown Man event. My name is Joshua Cotton. I am the host of Grown Man, Grown Man. We are a private group of men that inspire, teach, and share wisdom with each other. We walk in with the purpose of helping each other grow. So that's the purpose of Grown Men, Grown Men. Today we'll be talking with my brother Brandon Price and with an expert insurance agent. Her name is Carolyn George. I'm gonna turn it over to Brandon, and he's gonna give you more information about her.
Yes. Thank you, Joshua. I appreciate that, sir. Carolyn George is a friend of my family at this point. She has been a blessing to us and finding ways to allow us to save money, but make sure additionally that we are protected. We are a normal family, just like a lot of normal families out there that have budgets, that have different concerns with our little money that we have, and we try to make the most of it, right? And so we met a person like Carolyn that comes in and let us know the value of what we can do if we maximize what we have, but then also still have protection in the case of an event was to occur to myself or anyone in my family as example. And that goes beyond just my two daughters and my wife. That goes beyond my brother who is in a wheelchair and other individuals within my family that I can give protection to through her programs. And so Carolyn George was introduced to me by a friend of mine named Craig Maddox, and we've been going strong for a number of years now. And so Carolyn, thank you for joining us today for the Grown Man, Growing Man Ministry of part one of our financial seminar, which deals with life insurance. And so at this point, Carolyn, you can take it away. Thank you again.
No worries. It's such a pleasure. Thank you guys for inviting me on. I'm honored that you guys are allowing me to share some of my wisdom with the community. So, just a little bit about myself, a little background. I have been in the insurance industry for over 4 years at this point. And I'm not going to say that this was my life dream. I didn't, grow up saying an insurance agent is what I'm going to be, right? It's something that actually kind of fell into my lap, but I developed a passion for it. And about 3 years ago, I lost my brother, and that kind of solidified what I did. I realized the impact that I make. You might not understand it, you might not realize it. Hopefully, you do, but if you don't, your family will be forever grateful for the decision that you made. So, over the number of years, or over the last 4 years, I've lost a number of people. Some people in my family, some of my clients, right? But at the end of the day, I know no matter what, no matter how big or how small the policy is that they had, that the family is always grateful that I was there to service them, right? So, I'm going to share my screen with you, and hopefully you guys, you're at home watching, if you tune in later, if you even watch it on your spare time, hopefully you guys can take note of this information and use it, because whether or not I'm your agent or you're looking for an agent, this is something that's going to service you or your family eventually. Okay. So I'm going to share my screen with you guys. Now, it's my contact information. So for those of you who are not able to join right at this moment, definitely take this information down. You have all of my direct contact. Although I am working from home like most people, so the office probably isn't the best place to reach me right now. But if you leave a voicemail for me, I'll definitely return your call. But that cell phone number, that's my direct number. You have my email address, okay? So let's kind of get into it, right? Let's talk life insurance, right? Let's talk about it because this is something that we don't talk about, especially in the inner community, right? Like you guys said, the purpose of this is to help grown men grow, right? And it's not just the men, it's the women too who need this. So hopefully you guys are watching this with your family or with your spouse or whoever the other decision maker is in your life, right? So, what is insurance, right? When you think about it, by definition, right, insurance is a practice or arrangement by which a company or government agency provides a guarantee of compensation for specified loss, damage, illness, or death in return of payment of premium, right? It's a thing providing protection against a possible event. Simply put, insurance is the transfer of risk, guys, right? It's saying that the insurance company is going to take all of the risk off of you, off of your family in the event that you die, that we, or not me, but the company itself is going to make sure that we pay out to your family, right? So when you think about it, you say, okay, so now I know what insurance is. The question now becomes, can you buy insurance? Guys, the answer is maybe. Maybe you can, maybe you can't, right? But that's what we're going to talk about today. So, what does that mean, Carolyn? What does that mean? Maybe I can buy insurance. You say like, "Hey, I have the money, I have everything that you might think you have everything that you need, but insurance isn't a right. It's a privilege to have, right? The purchase happens when the company allows it to, not just my company, any insurance company. It is discrimination, but it's legal discrimination, right? But remember what insurance is, it's the transfer of risk. So the company has to take a risk, right? When you think about gambling, is it a risk that you want to take on? The company needs to know that it's going to be beneficial for them just as much as it is for you. So, what are some of the determining factors for qualification, right? Or if you can buy it? It's going to be your age. The older you get, the, I guess a polite way to say it, right, is the closer chance of you dying are, right? Health issues kick in at that point. When you think about habits, right? Are you a risky person? This doesn't just go to skydiving and parachute jumping. This has to do with your incarceration history. Have you been to jail? How many times have you been to jail? What did you go to jail for? People always ask me, like, well, does that matter? It does, right? Because if you're a person that has 3 or 4 DUIs on your record, do you think the insurance company really wants to insure you? Right? If you've been in and out of jail quite a few times, do you think that's something that the insurance company wants to take on? Right? Your health, whether young or old, we can all agree that people are not in the best health condition, right? You're not in the best shape. Whether you're young and you're extremely overweight, or you're a little bit older and maybe you have high blood pressure or diabetes and you're not really taking care of it, right? Your health is the one of the biggest factors when it comes to if you can buy a life insurance policy. Now, when you think about it, your financial ability. Financial ability doesn't just mean that you can pay for it right now. It means that you're in it for the longevity, right? Can you continue to make these payments? Is it something that you are ready to commit to? Because it does take a commitment to be able to do this, right? So when you go back and we think about it, right, you really want to think about this. Why is there so many qualifications, Carolyn? Like, I have the money. Why doesn't the insurance company just want to take my money? Because at the end of the day, you and your family are the only people that are guaranteed to benefit from this, right? Your phone insurance. How many people have phone insurance, right? I did the math before this call. I am, I'm just going to say, I've been paying my phone bill for about 20 years now, right? At $15 a month, for 20 years, that means that I've paid $3,600 on phone insurance. How many phone claims have I actually filed? One, right? But when you think about it, why do you have phone insurance? The honest answer that people don't want to hear is because We cannot afford these phones, right? A phone is $1,200. So you have the insurance in case you break your phone, in case it gets lost. You don't have to pay $1,200 up front for a phone, right? And if you can afford to pay $1,200, most people don't want to because they have other bills, they have other responsibilities, right? Same thing with your car insurance, right? Your car insurance is mandatory. You don't have car insurance, what do you get? You get a ticket, right? But think about how many years you've been paying for car insurance and how many car accidents have you actually gotten into? How many times have you utilized your car insurance? Not very much, right? But again, think about 20 years of driving, one car accident, so one deductible for $500, but how much have I paid into it at this point? Your health insurance, even that is mandatory by the government, right? Or at least it was. So now, who does that benefit? That benefits the doctors, the hospital, even the insurance company at this point, because most of us never even go to the doctor. It's a lot of people out there who haven't had a physical in about 5 to 10 years. I know because I deal with them every day, right? Your renter's insurance. You have renter's insurance in case something happens in your home, in case there's a break in case there's a flood, anything, a busted pipe, right? You want to make sure that everything you work so hard to put into your home to provide for your family is covered. But at the end of the day, guys, what we don't realize is that you are the most valuable asset to your family. You have an income. If something happens to your income, what's going to happen to your family? Why are you not protected? Why is it not mandatory for you to have life insurance? And again, that answer goes back to because it doesn't benefit anyone for you to have it besides you and your family. One thing people don't realize about life insurance is that it is tax-free money, right? You leave it to your children. You leave 500,000 to your children. That's $500,000 that is tax-free. The government gets no part of that. The hospitals get no part in that, right? The only person you're actually paying is the funeral director at that point. So when you think about it, it makes sense for it not to be mandatory, right? But another thing that's not told to us is that life insurance creates generational wealth, right? Everybody else knows this, except for people in the inner community, or should I say, it's not stressed to us the same way. So when you think about it, right? Generational wealth. Some people are going to say, Carolyn, I worked hard all my life. My kids can work hard. That's true, they can. But just think that if your parents, your grandparents were really educated about this, if they really knew how to utilize this very important tool, wouldn't you like to have had a a helping hand, right? A head start in life instead of starting from scratch. Don't you want to make it a little bit easier for your children, for your grandchildren, when there are so many things against you, right? This is one thing that can truly, truly, truly make a difference for you and your family. It's one thing that can truly elevate the lifestyle, right? And now people are going to say, but Carolyn, they told me insurance isn't to elevate you. It's really designed to maintain you, right? But when you think about it, you don't really want to maintain a $15 lifestyle, right? You don't, every generation wants their child to do better, right? You want to give your child more than what you had. You want them to be a little bit more prepared than you were. So one way that you can do that is life insurance, right? You are literally providing so many new opportunities for you. It's one thing for us as parents, right? And this is unfathomable. But if you lose a child, right, you still have income. You can still get up and go to work every single day of the week. Your income does not change, not one single bit. But for a child to wake up and not only have they lost a parent, now they've lost the lifestyle that they are accustomed to. For those of you who have children, think about it. I know right now if something happened to me today, Lord forbid, who would take care of my child? But the question is always going to be the same. Can they afford to? Does my child lose certain opportunities and benefits that she has in life? And the answer is quite frankly, yes, right? You have to think about the financial burden that you're leaving behind. And the best way to do so is to have life insurance to eliminate that burden, right? So now we go on and you say, okay, Carolyn, so what's the best type of life insurance? There is no best, right? The only bad type of insurance is no insurance, right? That's the only bad type. Now, there are different types, yes, but one is not better than the other. They're just better at certain things, if that makes sense, right? So think about it, right? Accidental coverage. It's the least expensive form of life insurance. It only pays out in the event of an accident. Oh, well, what's an accident? What qualifies as an accident, Carolyn? That's going to be a car accident, your ceiling fell in, a slip and fall, um, gunshot, uh, domestic violence, stabbing, whatever you can think of, right? But it's definitely a good way to increase the value of your insurance portfolio without increasing the price. Okay. The next one is going to be a universal policy, right? So, universal policy is a little bit different. It is an amazing investment policy, but the cash value depends on how well the stock market does. It's not a policy that you want to keep to the end of time, but you definitely want to make sure that you take advantage of the higher interest rates that come with the universal policy. Okay. So now when you think about it, it's like if term and whole life came together and had a baby. It's a temporary policy that's not going to cover you forever, but it does gain interest and cash value. Now, what's going to happen is that your interest and cash value is going to peak at a certain point. Once that policy peaks in cash value, it's designed for you to actually withdraw your cash at that point, because if you don't withdraw it, what's going to happen is you're going to continue to pay the same amount monthly, but the actual cost of your insurance went up, just like with the term policy. It increased every so many years. Okay. Now you're still paying, let's say, $50, but your insurance costs $150. What do you guys think they're getting that extra $100 from? It's coming out of your cash value, right? So once that peaks, it's going to start to decrease. And I can guarantee you it's going to decrease a lot quicker than it actually peaked. Okay. Again, this determines on the stock market. There's usually a floor and a ceiling, right? So there's a minimum, meaning the average you're going to earn is 2%. Maybe the max you're going to earn is 6 or 7% of your premium that you're paying. 6 or 7 is good, right? The best benefit about a universal policy is that it's going to earn interest a lot quicker than a straight whole life policy would. Okay. Now, if you have insurance and you're not sure what type of insurance you have, a good way to determine that is most companies that end in mutual. Yes, Brandon.
Yes, Carolyn, I have a couple questions.
Okay.
So going back to the accidental life insurance, um, you mentioned like domestic violence, like that's possibly like an example of um accidental, like for instance, if someone gets into obviously an altercation or some
Any
and
form of
someone,
violence.
say that again, Carolyn.
Any form of violence, anything that's not internal. Okay, so in those
Right.
extreme situations of domestic violence, right? If a person dies from that, that is an accident.
Mm-hmm. And so that would include additionally, like for instance, if there was a shooting or something, but okay.
Yep. So stray bullets,
Mm-hmm.
right? Drive-bys, a victim of drive-by, victim of gang violence, anything that is not health related is considered an accident. Okay.
Okay.
Meaning it wasn't internal. So any outside factors that came in and caused your death. Now, people are going to say, okay, well, what if a perfect example? What if you had a car accident January 1st and a person died January 25th from a heart attack, right? If that heart attack can be linked to the car accident, then yes, that accidental coverage is going to pay out.
Okay.
Okay.
Thank you.
Makes sense.
Yes, and I'll have It's a pandemic related question, but would you prefer for me to save that to the conclusion?
Sure. Yeah,
Okay.
we'll jump on that because I might cover it.
Okay.
If I know what I think I know what you're gonna ask, I might.
All right. Gotcha.
Okay. So now when you go to universal policy, right? We covered that. So that's going to depend on the stock market, right? So now let's get to some of the most common types of life insurance, the kind that you're going to run into every single day, right? Every time you meet an agent, I guarantee you we're going to offer you one of these products. Now, one thing I didn't touch on that I want to go back, right? You might assume that you have accidental coverage, but you'll realize also a lot of companies don't offer accidental. It's not included, especially for younger people, because 75% of the time, if a person under the age of 30 dies, it's from an accident. Okay. So you want to keep that in mind. Accidental coverage is amazing to have, especially for younger people, people with riskier jobs. Okay. So if you work outside, if you're a driver, whether you're a truck driver, train conductor, Uber, Lyft, whatever it is, accidental is always amazing to have, and it doesn't cost you much of anything. Okay. Now, the next thing, term insurance, right? So this is where the conversations tend to get really, really good. Okay. So term life insurance is going to end up with temporary coverage, right? So it's not permanent. You have to renew and requalify for it. Every time you renew and requalify, the price is going to increase. Okay. There's no cash value, and it's designed to pay off large amounts of debt that you're going to have for a short period of time. So if you have small children under 18, maybe you need to leave money to take care of them. Maybe you want to leave money for college. Maybe you have a mortgage to pay off. Maybe you have business debts that you want to make sure are covered, right? Whatever that is going to be, it's not meant for you to keep forever. Okay. Now, the premiums are also lower than whole life premiums, but there's a reason why. Okay. So now when we move to whole life never expires. You never have to renew or requalify for it. Your face value is never going to decrease. Your premiums are never going to increase. Okay. So what it does is it locks in your age, it locks in your health, and it's going to lock in your premium rate. It gains cash value. It is an asset to you. Now, this is where it gets really good, guys, right? Because when we talk about whole life, maybe you're familiar, maybe you're not, but this is where we're going to go into the infinite banking concept. Okay. It's called IBC. This is how you become your own banker with whole life. Okay. Because whole life is going to gain interest in cash value. It's the oldest and most popular form of life insurance. Now, it's guaranteed to pay out 100% of the time versus term 2% of the time. But term doesn't pay out 2% of the time because it's a bad product. You have to know what you have and how to use it, right? So remember, it's designed for certain things. Whole life is designed more for your final expense protection. So term is for if you die between this point and this point. This is what you get through your job, right? So if you die while you're employed, if you die in the next 10 years, the next 20 years, if you don't die, congratulations. But guess what? You don't have a policy anymore. And the older you get, the harder it is to requalify for those policies. Okay. Now, when you go back to whole life, right? You say, okay, Carolyn, you said it was an asset, right? It is, because what is it doing for you? It's going to gain interest in cash value. That's money that you can withdraw from that policy while you're alive. Okay. That's your money. You can take it out and do whatever you choose to do with it. For people who own a home, it is easier to access your cash value in your whole life policy than for you to pull the equity out of your home. Okay. It is a liquid asset. That means if you need your roof fixed, if you need a new car, whatever it is, if you need to pay your child's tuition, if you have hospital bills, this is money that you're able to access from your cash value, right? So now what we're doing is your life insurance policy is doing what? It's benefiting you while you're alive. How amazing is that? You don't have to be deceased to benefit from your life insurance policy. It's not just for when you die. This is what's helping you grow, helping you live. Instead of you purchasing, instead of you taking out a loan from your bank from a friend, guess what? You get to become your own banker. You can withdraw your money, you pay yourself back with interest, and it's always going to be there for you to go back and forth. Another thing people don't realize is that once you hit 65 and you retire, the average person lives off of less than $30,000 a year. Okay. Now, with your whole life policy, if you take that cash value that you've accumulated, you put it into an annuity for yourself, that annuity is going to continue to generate more income while you're alive, right? That's going to pay out to you. But guess what? You still have your death benefit. Okay. So it's pretty exciting when you think about it. I get excited thinking about it because I never knew this. This wasn't taught to me when I was in school, right? It wasn't until I became a life insurance agent that I learned these things. Okay. So now you say, okay, well, Carolyn, there's different types of life insurance. You gave me a lot of information. How do I know which coverage I should pick? Oh, well, some of the things you want to look at, right? Family dynamics, your level of commitment. If this is your first insurance policy, maybe you should go with a term, go with something less expensive, right? Remember, there's no bad coverage. What are your finances, right? What are your future plans and goals? A good insurance portfolio comes with so many different types of coverage. You should have some whole life, you should have some term, you should surely have accidental. Okay. Now, how much should you spend? This is going to help you figure out the plan that's best for you. When you go into how much you should spend, 3% is your bare minimum. Okay. 3% of your monthly income after taxes. So if you bring home, let's say $3,000 a month, your insurance at a bare minimum should be $90 a month. 5% should be your goal, which will put you at about $150 a month. And 10% and above, that's going to be determined based off of your financial ability and your commitment to do so. Okay. Because you putting up 10%, what you're really doing is you're creating that savings account. You're building on your interest, the equity, right? So if something should happen, you have it there to pull from. Okay. But you don't want to go 10% if you have to make a decision between the cable bill and your life insurance. If it's going to be between the light bill and the life insurance, because what people don't realize is that when you die, the light bill is still due, the cable bill is still due, right? But what bill is going to take care of all of those other bills? It's going to be your life insurance, right? Something happens, your kids still need lights to see, but the life insurance is going to make sure that that's paid for. Okay. And then Brandon, these were just some things for everybody who, anybody that reaches out to me, they're going to receive this. It's going to be at no cost to them. Okay. It's going to be a small $2,000 policy. Then it's going to be this AIL Plus program. This AIL Plus program is 100% amazing, okay? Because it's going to reduce all of their out-of-pocket expenses. So right now, like during the pandemic, people have reduced hours at work. Maybe they are not working. Maybe they lost their health coverage, whatever the case may be. It's going to definitely save them on their prescriptions, diabetic testing supplies, vision, dental. There's going to be a telemed program, chiropractor, durable medical equipment. There's a hearing program, vitamins, nutritional supplements. And then that $2,000 policy, they'll have that. They'll receive a digital copy of it as well. And then it's at no cost to you guys. It's one way that we can actually give back to the community. Like Brandon said, I've been his agent for quite some time now. So I'm always looking for different ways to give back. It is a legal binding document. It's an actual policy, guys. So you all get to pick your beneficiary. It'll be mailed out to you. And then for those of you who are just joining, this is definitely my contact information, my direct line. Okay. If I don't answer, I might be with the client, but always feel free to leave me a voicemail or shoot me a text message. I usually respond to text right away within an hour at least. Okay. Questions, Brandon. So you had a pandemic question, right? And I know you're going to say, hey, is COVID an accident? No, it is not considered accidental. Okay. That's like having the flu. right? So it's going to be internal for those extreme cases of COVID, which I have lost a few clients, unfortunately, to COVID. Um, those are all internal. So asthma attacks, COVID, the flu, things like that are considered, are not considered accidents.
Okay, gotcha. And additionally, what do you say to people, Carolyn, who are tuning in? We got a few folks on Facebook going in and out, different things. We
Okay.
will get it to various platforms, and we will love for you to come back again, additionally, to do a follow-up presentation again, probably with the same possible information again, because we want to make sure people get this to the people. And so during this pandemic, right, a lot of folks, as you guys know, are stressing, funds are thin. How can you put, you know, a lot of folks might put the cable bill over the life insurance bill, or things of that nature. And so what do you say to folks during this time, during this pandemic, where people are losing jobs, different things, employment's hard to find, um, in the midst of getting an insurance policy or life insurance policy during the midst of everything that's going on? Like, what would you say to those folks, Carolyn?
So that is a really good question, right? But those are the type of questions that get me really excited. We have a due date. Whenever we're expecting a baby, there's a due date, right? You're going to have your baby on or around this date. Nobody has an expiration date. You don't know what tomorrow holds. You don't know if it's a car accident. I don't care if you're the best driver in the world, right? You don't know about the drunk driver that's coming up the intersection, right? You don't know about the stray bullet that's going to come through the window. People will be amazed to hear some of the things that have happened to my family, right? My youngest brother. We didn't plan for any of that. And he's still living and breathing by the grace of God, right? But we didn't plan for that. It could have went so wrong. And at that time, I wasn't an insurance agent. So thinking about that, how can you prepare for something you don't know is going to happen?
Right.
Right? Think about that phone insurance. It's the pandemic, but the chances of you getting COVID, right? Because I've had it, right? Unfortunately. But again, fortunately, I fared a lot better than a lot of people have, right? I'm still here to tell my story.
Mhm.
So there's going to be things, we're going to have situations that are going to come up. But the best thing I can say is sit with the agent that cares about you. I'm successful in this business because of my customer service and my level of care and the empathy I put into creating a program that's specialized for that individual. Brandon, we sat down and we talked for a really long time when we were coming up with your program,
Mhm.
right? I take into account everything that you have already. And then I want to build that program to you. You never want to meet with an agent that is trying to persuade you to replace or cancel a policy that you have. There's no limit to how many insurance policies you can have, right? There's no rule to say, hey, you have two, that's all you can have, right? So sit down with someone that shows that same compassion, whether it's me or another agent. At least you have this info so you know the questions to ask when you meet with somebody. Maybe you do go to State Farm, maybe you do deal with Primerica. Those are all great companies to deal with. I have nothing against those companies, but just make sure that the rep you're sitting down cares about you just as much as they do their paycheck. Okay, and if they do, they'll find a program to fit your budget, even if it's a $15 program, a $20 program. As long as it holds value to you, your family, and your situation, you can't go wrong with that.
Mhm. Yes. Thank you.
I also have a question as well.
Okay.
Um, do you talk about wheels and how important it is to have a wheel?
So I don't, if people ask my opinion on it, I 100% will. I have a will.
Okay.
I had my daughter, so everybody keep this a secret, but I'll be 38 this year. I had my daughter when I turned 30, right? And at that time, so this is crazy you asked that question. So I was a store manager with Walgreens for over 11 years, right? And I had 5 times my salary, and I was like, huh. this is, you know, I don't need any life insurance. And then when I left, it was crazy because I left to become an insurance agent. And I was like, okay, guys, so who do I send my life insurance payment to? They were like, oh no, you don't get to keep that. You can keep the Cobra package for $1,000 a month, but the life insurance is gone. And at that time, I had developed a will, right? I had a will based off of all this insurance I had through my job because I was like, hey, this is my first child. This is my only child. I want to make sure that if something happens, right, that my child and all of this life insurance I have is going to be dished out the way that I planned for it in my head, right? And then I realized that, hey, that job insurance is great to have as extras, but it doesn't go with you. You know, you can't take it. You don't get to keep that. So it is important to have something outside of your employer. And it's very important if you have a lot of insurance. Myself, I have quite a lot of insurance, right? I found out that it takes $757,000 to be considered part of the 1%. Okay. So obviously, I didn't have that pleasure of being born into the 1%, but I wanted to make sure that if I died, pray to God that it's later rather than sooner. But if I died, that my daughter was going to be in that 1%. Okay. But we all deal with the same worries, right? Who am I going to leave all of this money to? Are they going to do right by it? I don't want them just to spend my money and neglect my child. So I did have a will created, and you should if you have a lot that you want to leave. But I wanted to make sure that one, my daughter was taken care of in her younger years, but I also wanted it to be money there when she went to college, right? When she graduated from college, I wanted her to have a Head Start fund. So yes, if you have a lot of insurance, and when I say a lot, I mean, you should have over $250,000. If you have a $50,000 life insurance policy, there's nothing wrong with it. That's what you can maintain right now. Get it and commit to it, right? But you have to know that a funeral is about $20,000. And that's just a regular funeral. Death is not cheap. So, you know, when you do a will, it takes so much. A lot goes into sitting down, writing a will, coming up with it, that you definitely want to make sure that it's worth you taking out the time and going into it. If it's about the money, but if you just want to make sure that, you know, your kid goes to a certain person or whatnot, then definitely, you know, you can write that out and get it notarized. For those of you who don't want to do a will or don't have a will, or they're not sure how to get one, you can write a letter, have it notarized, and put it with your important paperwork.
Thank you for that. I have one other question as well. If you can talk briefly about how important it is to share with your family what type of insurance you have, or if you even have insurance, because a lot of times you be thinking, oh, mom got insurance and found out she didn't have anything, or you be thinking that they had term or life and thinking that they left them something and they found out they got $7,000 on some form of accidental insurance with a company they don't work for anymore. So just being aware where your life insurance policy is. If something happens, we have this discussion.
Man, you guys are asking really good questions, right? So that's an amazing question, Josh. I talk about this a lot when I meet with people. Your life insurance, everybody has the myth that, oh, if they know how much insurance I have, they're going to try to do something to me. You know, I don't need everybody in my business. A lot of times people advocate, right? I get this all the time. People, I'm like, well, you know, how about, do you know anyone who can use insurance? No, they have it. They have it. They have it, right? Okay, that's great if they have it. And a lot of times people advertise when they get it or when they have a great agent that they like. Nobody advertises when they let their policy lapse. Nobody advertises their financial hardships, right? That you had to make the choice between the light bill and the life insurance bill, right? So what you really want to make sure that you do, I tell this to everybody. There's a few rules to this, right? Don't ever put your life insurance policy in a safe, right? People lose the combination. If you die, your combination is a secret. When you die, Josh, where's your safe combination at? Who has the code to it? Right? You, only you, because you don't want anybody to go in there. It's your safe to keep things safe, right? Think about it. Don't put it in your safe deposit box, because what's going to happen? People do not have access to the box. You have to have certain paperwork. Now, what the bank will let you do is look in, but you can't touch anything in that box. I have an uncle, he passed away in July, August, and his daughter is still going through the motion just to get access to his safe deposit box, right? She had to hire a lawyer, draw up some paperwork, things like that. You also want to make sure that when you get a policy, you give a copy of that policy to your beneficiary. You pick that person. That's your beneficiary. The insurance agent or company didn't make you leave it to your sister or your mother, right? Whoever you trust, that's the person that should have your policy. Should you have a copy of it? Yes, by all means. But that's just like when I tell people, you deal with me, you know you have an insurance policy, but at the end of the day, when you die, it's not you that's filing a claim. It's your cousin, your sister, your brother, whoever that person is, right? So you definitely want to make sure that they have a copy of it, and you want to keep it in a clear waterproof container, guys. Put it on a shelf, right? All of us, we have our paper drawer, our tote bag, junk drawer, whatever you want to call it. I can guarantee you that nobody is going through all of those papers trying to find your life insurance policy. Okay, so make it known. Give your agent's contact information. I can't speak on other companies, but one thing I love about my company and the people that I work for is that I am the agent that's going to enroll you. I am also the same person that's going to file that death claim when that time comes. Lord willing, I'm still around, right? So you want to make sure that they have your agent's contact information. They know what company. There are hundreds of thousands of insurance companies. Nobody is going to guess like, oh, I think they had a policy with State Farm. Oh, yep, American Income Life. We don't even advertise, right? Think about some of the companies, American Income Life, right? We don't advertise. You have USAA, right? You have Navy Federal, companies that people will never, ever, ever think about. But there's a good chance that your family member or your loved one might have a policy with them. So that was a really good question, guys. Don't be ashamed to share that information. Give those policies to your beneficiaries. Make sure they know where they are. Make sure they know how to reach your contact info, your agent. You know, be proud of what you have and don't be afraid to share it. You might actually influence someone else to make the right decision by doing so.
Mm-hmm. And Josh, that was a great question as well when you spoke about the will and different things, and Carolyn went into talking about people that work in corporate America. So that was a question of mine. Beat me to it, brother. However, it was something I didn't do, Carolyn, when I was younger. I would have life insurance representatives come up to me. This girl was from Northwestern Mutual, and she would try to talk to me about a policy. And I was fresh out of college, big headed. Y'all know how I go, making my money and finance, and but I'm at the same time sitting there thinking about it. Now that I'm 31, I'm like, was I really making that much money? Because I was sure afraid to invest into an insurance policy. And so, just curious for like the young folks, or for the people that are working in corporate America, if they ask the question, how can I still save money and still get the coverage I want? How can I still save money and still get the coverage that I want?
So that's another good question. People under the age of 25 used to be my kryptonite. Like I hated people under 25. If somebody was like, I have a cousin there 23, I used to be like, don't send them to me. Like I'll find you somebody, because the frustration used to kick in like, oh, right. Like, oh, the first thing they say is, I don't need that. I have coverage through my job. I don't need that. And it's like, I know you don't need it. You're not dead. You only need life insurance when you die, right? That's the point. But think about it. If you jump out of a airplane without a parachute, do you really have a choice of going back to saying, you know what? let's redo it. Let me get a parachute this time, right? It's the same thing when you have a life insurance policy. If you die without it, there's no do-overs. You know, your mom can't be like, let me hurry up and get a life insurance before they fill out the death certificate. It doesn't work like that, guys. So young people, you have to think about again, why does it make sense for you? And honestly, there's different ways to look at it. You can say, you know what, just get a term policy. It's inexpensive. You don't have to worry about it. It's, you know, you can do it for $20, $30, right? Or you can be smart like we were not, right? And say, hey, you are 22 years old. Get a whole life policy for 300,000. Yes, you're going to pay $150 a month for it, but guess what that's going to do for you in the next 10 years? Guess how much cash value you're going to accumulate? Guess what you can do with it at that point, right? Prepare for the future. And I take it's our fault, right? I blame us for the young people being a little bit naive, right? Because guess what? We're in our 30s and we're just catching on to life insurance. So it's really on us to instill it in the generations after us, right, Brandon? You know, I have a 7-year-old, and my 7-year-old, she's really proud of me being the life insurance lady, right? She's like, "Did you want to be the life insurance lady when you were little, when you were growing up?" And I'm like, "No, I didn't want to be the life insurance lady." She's like, "Well, what did you want to be?" And I was like, a police officer. And she was like, "Well, why are you the life insurance lady?" I was like, "It just happened to go that way." But she'll tell you, like, we were in AutoZone and she's like, "Are you about to pay?" And I was like, "Yeah." She's like, "Well, can I give her your agent number?" And I was like, "No." She was like, "Why not?" I'm like, "She doesn't need my agent number." She was like, "Well, maybe you can hire her." And I'm like, and the lady is like, "Is she trying to give me a job?" And I was like, "Yeah." And then my daughter turned to me. She was like, "Maybe you can get her some life insurance." And I was like, "That's a good point." And she's like, "My mommy is a life insurance agent. Do you know what life insurance is? You can use that money to buy things."
Mm.
Right? But that's a conversation that I never would have thought to have with my daughter at a young age. It was only because she kept asking me, "What do you do? What do you do?" And I'm like, "I'm an insurance agent." "What is that?" "I sell life insurance." "What's insurance?" And I'm like, "It's money you can use to pay for things and buy things." And she's like, "Oh, you know, what type of things can you buy?" And I was telling her, and she was like, "I want a lot of insurance." And I'm like, "Okay, you can have a lot of insurance when you get older and pay for it, right?" But it's up to us to kind of instill it in the younger people, to show them, to spread the word about it, especially people in there, you know, from 18, I'm gonna say, up to 25, right? I
So you
still
saying that as an 18-year-old, I don't have to even wait until I'm after, like, are you saying like once I'm 21 or even 18, I can invest into life insurance and let that build up till I'm 65 or 70? Oh, imagine that, Josh.
imagine. So
I'm getting ready to buy my first policy at 18.
Oh, wow, that is awesome.
right? So now
Imagine
think
that
about
time value.
now think about it if you go even younger, right? Because we're just thinking about an 18-year-old being responsible for it. What if your newborn had $100,000 worth of life insurance? Oh my God. Right? What are you doing for them cash value wise? What are you instilling in them? Because once they turn 25, and you can say, "You know what, I've been maintaining this policy since you were a newborn." Think about the level of care and pride that you're showing them. Think about when they turn into a teenager and you start telling them about it and you give them a little bit of responsibility. They get their summer job. "Hey, guess what? Your insurance is $26. I need you to pay it." Right? What's wrong with us doing that before they even turn 18?
Right.
Because then at the age of 18, it's not a burden. It's not a bill. It's not a responsibility. It's just something that has to be done.
Mm.
Right. But that's where we have to think above, right? We have to think further than just us right now and for when we die, right? Think about all the benefits. My daughter does have, she has several policies, right? I started this, she's 7. I started, she was 3. She'll be 8 this year. So the first policy I got for, I was like, you know what? I'm gonna give my baby a life insurance policy. It's really inexpensive. It's locking in her age. When she's 70, she's still gonna pay the rate of a 3-year-old, right? But then I thought about it and I was like, wait, why does she only have one policy and I have three? Right? I'm paying $20 for it. Like, why can't she have three policies? Then I thought about it a little bit harder. You know what? Well, my daughter is 27. She can take the cash value from this policy. That's her congratulations. Leave me alone, money. You are an officially adult, right? Who would not, at the age of anywhere between, let's say, 23 and 25, who wouldn't want $8,000 head start, a $10,000 head start in life? You're coming fresh out of college with money now, right? You're not just in the hole with student loans and debt. Your parents had the foresight to invest into something that you are able to benefit from alive. You can buy a house, you can buy a car, you can start a business, you can do whatever it is. You don't have any limits or restrictions financially, right? So we have to start thinking younger, go younger than 18, right? We as parents need to start instilling it in them now. But you really can't be mad at your parents, right? I tell people this all the time. My mom had insurance. She didn't know the different types. And that's a lot of times people don't know what type of insurance is the best insurance. They just know that you should have it. But then she didn't instill it in me. She just gave me a bill, right? I'm 19. She's like, here's your insurance bill. You need to pay it. I was like, I'm not dying. What I need to pay this for? Okay, I'll pay it. And then guess what? It lapsed.
Mm.
But if I would have actually understood it and took care of it at that time, I'm like you, right? 38. Man, you know how much cash value I would have from 20 years ago? Now I have to wait. Like, that's
Mhm.
no fun.
And this is one thing I think a lot of people sleep on, Carolyn, and you and other experts in this field know about this. I think a lot of people keep that slide up, Carolyn. I think you might have to go back because I want to ask you about percentages or returns.
Okay.
But just basically, I think a lot of people sleep on the amount of growth financially you can get in relation to the stock market with your life insurance policy. I think a
Okay.
lot of people, they look at it and it's like a bond, right? It doesn't pay out as quickly as a stock does. And so people are like, I'd rather invest into this stock market or Robinhood and get robbed, like you've seen obviously on television lately, and try to get this return, um, and basically be in a deficit broke after you get robbed by Robinhood. Just what are the implications, or like how do people, or why do people sleep so much on the life insurance policy, not realizing the amount of value that they can get through the stock market, because it is associated with it in a number of ways.
So not all policies are associated with the stock market, right?
Right,
My
but there's some,
company,
right?
My company, we are a non-participating stock market. But what does that mean? That means that we pay you a guaranteed 4.5% interest on your premium, rain, hail, sleet, or snow, regardless of what the stock market does. So the stock market is always going to be a great investment, right? But there's so much risk associated with that investment. Your life insurance is always going to be a guaranteed thing.
Right.
Okay. So if I go back, right? Let me go back. So that was a good question, right, Brandon? You get me excited when you ask me stuff like that, right? So, oh man, where am I? Sorry, guys. Okay. So you go to a universal life policy, right? This is one that participates in the stock market. So think Northwestern Mutual, Omaha Mutual, Mutual of Washington, or Washington Mutual, right? Anything that has mutual, State Farm, Allstate, those are all participating companies, right? They pay you a dividend and an interest rate based off of how well their investments are doing. But guess what? Just like Robinhood, right? What happens when you invest into something that doesn't go well? What's the chances that you're going to earn that 8%? See, that's what they don't tell you. They tell you you can earn 8%. There's an 8% interest rate. Yeah, it is. But if I look at the history, the company has really only been paying 3%.
You preaching to the choir right now.
Right? So is this really the best policy? Yes, right? The stock market is always going to be, in the terms of the way it's going now, it's going to be quick money, right? You think about what just happened with GameStop and those companies. It's quick money. It's turnaround. Everybody's looking for the quick fix, right? But quick fix comes with risk. So what happens when that doesn't go well? What do you have to fall back on? Nothing. Now everybody's gonna say the same thing. Carolyn, I can save that amount. It's only gonna give me 36,000 in the next 20 years or the next 30 years. Yeah, but that's 36,000 guaranteed dollars, right? But Carolyn, I can just save my money. You could, but do you? How much do you have saved right now? If I ask to borrow $3,000, are you able to give it to me right now at this moment? It is not to say anything bad about a person, right? But the chances of you doing it are slim to none, right? So when you have a straight whole life policy, right? When you get to it, what's going to happen is that this is where your guaranteed money is coming in at. The bank is going to pay you 0.01% on your savings. So if you put, let's just say, $20,000 into it, Brandon, you're the financial expert, at 0.01%, how much am I making on that?
Not much.
Not much at all, right? But the bank just held my money for 20 years. And they just gave me $200 in 20 years. But guess what your bank isn't investing into? Guess what the number one thing JP Morgan Chase invest in?
Is it real estate?
It's life insurance.
Oh, okay. Wow.
It's life insurance. Guess what the only thing that's guaranteed in life is? It is death, guys. It's morbid, but it's the truth. Okay. So if the bank is taking your money to invest it into life insurance, why are you not investing into life insurance? Right? Think about all of the prominent families in history, the Bushes, the Rockefellers, right? This is decade long money. These people have had it, right? But you have to know that somebody in that family wasn't as financially savvy. Somebody in the family wasn't responsible, right? Somebody just blew some cash at some point in their lifetime, right? But guess what they always have? No matter how rich people are, they always have life insurance, right? I love when I meet people and I have some agents, right? Kareem, she was just guilty of this. She's like, oh, they have a lot of coverage. They didn't need anything. I'm like, what do you mean they didn't need anything? They have a lot of coverage. They want something. They want you to sell them some more coverage, right? They want it, they need it, they love it, because what are they doing? They're protecting their finances, they're protecting their income, they're protecting their legacy, right? So no matter how much money they are making right now, guess what? This policy is going to continue to pay out. It might not pay out to their children, but guess who they're going to pay to? They're going to pay to their grandkids. It's generational wealth. That's how you always ensure that the next generation is able to maintain. Okay. So it's really like, you have to think longevity. You have to think your savings account is for if something happens, if your car breaks down, if you want to go on vacation. Your savings account isn't to pay for your funeral. It isn't to pay for your final expenses. Your life insurance is to do that, right? No matter what type of life insurance, again, there's no bad insurance, but when we're thinking, finances and how to prepare, it's your whole life insurance that's going to get you to where you need to be, right? So one thing that I really, I was talking to somebody and he's like, can you tell me about infinite banking? And he was a young guy, right? The guy who actually helped me make that poster. And I was like, look at him. He's about 18, 19, and he's asking me about infinite banking. Like, this is a person I want to talk to, right? Because he's so young. So infinite banking is actually the process in which an individual becomes their own banker. You finance all of your purchases through yourself, through your life insurance, because your life insurance is earning a equity, a cash value. Now, when you take it out, you can take it out whenever you choose to, but now you're paying yourself back with interest. You're not paying Chase back. You're not paying Bank of America back, right? All of your money is going back into you, your family, your legacy. Okay. So that's something that's really exciting. You know, a lot of people don't understand it. They don't know how to make it work for them. But this is what this is about, right? You want to make sure that you're ahead of the game. When we've been behind for so long, how do you just get ahead of the curve? How do you make it a little bit easier for you? Now, I'm not going to say it doesn't come without some sacrifice, right? If you have a policy and you're paying $150 a month for it, you might have to give up that hairdo. You might have to give up those pair of shoes, right? You might have to sacrifice on guys' night out or ladies' night out, because what you're sacrificing, right, which really seems like a burden to us right now, guys, it is truly not a sacrifice. All you're doing is planting seeds of greatness for the next generation.
Mm-hmm. Mm-hmm. Yeah, thank you for that. Wonderful answer. I just know
Get excited, guys.
it's a common question, Carolyn, you know?
Yeah, I get excited when we get into stuff like that, right, guys? It's really, for me, I mean, it's not exciting for everybody, right? But hopefully there are some people out there who have had the luxury of being the beneficiary of a life insurance policy, because what that means is that you know how important it is. You know what it means to have that, you know, to not be in debt because you had to bury a loved one. When you die, I get some people and they say, you know what, I took care of my kids all their life. They can bury me. That is such a selfish way of thinking, guys. That
Mhm.
is so freaking selfish. Like, maybe you did take care of your kids. Maybe you were even there for them in their adult years. But it's really not your kids that's paying for that. Think about it. It's your
Who
grandkids,
thinks like
right?
that? There's people out there that think like that.
Brandon, there are so many people like I meet, and that is exactly, those are the exact words that come out of their mouth. You know what? I took care of my kids all this time. They can take care of this one thing. They can handle this. They'll have to figure it out. I'm dead. I'm gone. What do I care? Not my responsibility. Wow. You know, and sometimes as an agent, I'm like, oh, really? Right? So you're going to put this on your kids. And if your kids are old enough to pay for this, 9 times out of 10, they have children, right? So now what you're doing is you're taking away from your grandchildren. You're taking away opportunities that they might have, because now your child has to scrape, beg, borrow, or dip into their savings account to put you away properly, because no one wants to ever bury a parent and they have to, excuse my language, but they have to half-ass it, right?
Mhm.
Like, you know, nobody wants to go through that situation. No one wants to have a GoFundMe. Nobody wants to sell dinners or, you know,
Ask
really
their
have,
cousins and call 100 family members. Y'all know how it go.
you know how it is, right? Nobody wants that GoFundMe. Like, who wants to be bothered? Who wants that shame, that regret, right, of not doing it right the first time? So the biggest thing I can say is, if all you can afford is a policy to bury you, get that. I don't care if it's 15,000, right?
Right.
And people ask me like, why does your company give away these $2,000 policies? And I'm like, because some people, they don't qualify, right? That's a reality of it. Some people, they're gonna die, and this $2,000 is the only thing that they're gonna have. But I can guarantee you that your family member is going to be so grateful for that $2,000, because that's 2,000 that they're not coming up with. We don't
Right.
advertise, like I said. So instead of us
Right.
paying for advertising, how about when we advertise, who does that benefit? That only benefits the company, right? That's getting clients for us, right? Right? That's, it's not doing anything for the community. So why not take that same money we would spend on advertising and put it into those smaller policies, and you can give it away to an entire community. So not only do we get advertising, we still get to help the community out in ways that most companies won't. So
Thank you, Carolyn.
no worries.
Appreciate that answer.
If I can ask one last question, how common is it for you to buy an insurance policy for maybe like a niece and nephew? And sometimes you tell them, sometimes you don't tell your brother or sister that you have a policy for their kid, just in case to help them out, something like that.
So you can 100%, as long as there's insurable interest, you can purchase a policy. So a grandparent can purchase a policy for a grandchild, a spouse for a spouse, a aunt or uncle for a niece or nephew. But okay. So Josh, I didn't touch on this, right? But there's different companies require different things. So this is something that's going to be really good, right? So there's called different policies. One is called the guarantee issue policy. That's like what you get online when you deal with certain companies online, right? Guarantee issue means they don't ask any medical questions. You're going to get the policy. But if you die in those first 2 years, that policy isn't going to pay out. Okay. Then there's called guaranteed payout. Okay, so those policies, that's a company like mine. We're going to ask all of your medical questions up front because we are guaranteed to pay out. Okay, so depending on the company that you go with, you don't really want to keep it a secret because then people feel kind of jilted, like, oh, they took a policy out on my baby and they didn't tell me. What type of scam artist stuff is this, and what are you trying to do to my kid? And it causes unnecessary drama. But you do want to be upfront. If you are a person that does want to have that conversation, the best way is to say, like, hey, you know what? I was just sitting down and I was going over my coverage myself. I have coverage for my kids. Do you have any coverage for your kid? I would definitely like to take out a policy. Your niece or nephew. I have a nephew on the way I'm pretty excited about. And as soon as he is 14 days old, I'm going to do a policy for him, right? But I'm going to make my sister the beneficiary of that policy. You know, it's not for me to benefit from it. And a lot of times people are worried that someone is trying to benefit from their death or, you know, the death of your child. When it comes to your kids, it's really touchy. So I would do it and present it as a gift. You know, this is a gift for my nephew. I took out this whole life policy. So when he reaches a certain age, it's just like when grandparents gift their grandchildren stock, you know, different little CDs, right? It's an investment. So take the life insurance the same way. It's an investment. So I want to gift this to you guys. This is something, give them the policy. Let them hold on to a copy of the policy. Let them see what it is. Be open about it. Don't try to be secretive about it because it won't end well.
But that is an excellent question, Josh, man, because I sit there and think about it, Carolyn. Like, as soon as you said that, I started thinking about 20 of my nephews who are out trying to be thugs. And I'm not, God forbid, but I know some of y'all can relate to. And cousins, maybe I got about 2 nephews, but you know, a lot of cousins, definitely young guys, and they parents ain't got no policies and they ain't got no policies. And they are claiming no block, and something happened to them, then here we go again, Carolyn, with you look, hello, you got this, you got that, and
But see, that's
so
where
that hit home, Josh. That hit home, brother.
Well, another reason why I ask, because a lot of times parents, they don't want to seem like they can't afford it, but they can afford it. And if you just want to help someone out and like, hey, I know you can't, and I know sometimes pride sometimes stops them from asking for help when they need it.
so pride stop a lot of people from doing a lot of things, right? But you have to also, again, just know that going into the thing, you know, this is a gift. This is something I want to do because my children are protected. I do have 2 stepsons who are in their 18, 19, 20 range, right? Between that 18 and 20. And we know living in Chicago, that is, it's terrifying. You know, you go to sleep every night, you wake up every morning, you check that news. When you see that someone was a victim of street violence, right? That really hits home. Especially, I grew up on the east side of Chicago, so anytime I see something over east, I'm just thinking like, Lord, please don't let this be anybody I know, right? But that's where again we have to be open to having that conversation. When they're that age, they might not be open to it, right? They might not want to hear it because again, they don't need it. But that's really where you just have to sit down with the parents and say, hey, this is something I want to give. You know, look, as an insurance agent, we don't want anybody to die, right? I don't know if people know that or not, but we're not banking on your death. We don't get paid when you die. We want you to live a long, prosperous life, right? Um, but you have to know, like, you have to have that conversation. One of my brothers, he wouldn't even talk about it with me for a really long time. Now, I've been doing this 4 years. He just got his policy on Thanksgiving, right? So I'm really, really proud of him. But it took 4 years for us to have this conversation, like 4 long years. So you have to know, like, don't give up on it. Don't end with it. Um, it might take a little bit longer than you wanted to, but definitely if you have a younger person in your life that you want to protect, like just be direct about it, be upfront with it. You know, let it be known, hey, if something happens to it, you can't afford to pay for it, right? People who say, oh, I can't afford to pay for this policy every month. If you can't afford to pay for it and you're alive, who can afford to pay for it when you're dead? Like, if you don't have it, what makes you think if you don't have $60 a month to pay for this, what makes you think that I have $15,000 all at once to cover you? Right? You don't. You have to be honest about that. That's a conversation that you can't be afraid to have.
It's a big difference. $60 a month compared to 20,000 plus at one moment.
At one moment, right? And the funeral director, do you think that they care that you don't have it? Do you think that they're gonna let you make payments on it? There's no, oh, let me give you 5,000 right now and I'll make the other payments later. It's not, right? And you see people and people are gonna say, 15,000. We can have a funeral for 5,000. Yeah, you can, but I guarantee you, you have a rented casket. I guarantee you, you have a plot with no headstone, with no tombstone, with no markings. You just get the little white cross that they stick in the ground to let you know that there is somebody buried there, right? When we talk about the price of a funeral, right? And a funeral, milk and eggs go up every year. Like, why do you think a funeral does not? It's guaranteed, right? It's the only thing that we know for sure is gonna happen, right? So you have to know that 15,000 is including your casket. Your people probably don't know this either, but a funeral is a la carte. Like, you have to pick and choose. You have to see the obituary person. You have to pick out your casket. You have to pick out your flowers. You have to go and find your plot. You have to pay to open, to close it, to seal it. You have to pay to line the ground that the casket is going into. You have to pay for that tombstone. You have to pay for wherever your service is going to be held at, guys. This is not something that's cheap. It is not something that is easy to plan or do. So while a person already has to grieve, don't make it harder on them where they cannot even properly grieve because they're so busy trying to worry about how they're going to be able to pay for this stuff.
Yep. Yeah. Very, very heartfelt. Carolyn, that was an excellent presentation.
Thank you.
And great, phenomenal dialogue. Joshua, thank you for your questions. I truly appreciate them. And thank you all for tuning in with us for part one of the Grown Man Financial Seminar. And with that being said, Carolyn, when or if we have individuals that reach out, we will surely reach out to them. Reach out to you if they don't additionally reach out to you with your information.
Anybody that reaches out to me, I'm more than happy to go over the coverage that you have already. More importantly, I am going to provide you guys with those benefits that I showed you at the end. I do not compete, replace any coverage or any policies that you have. My primary passion is just the education portion of it. So if you have a few more questions, maybe you weren't able to join, but definitely you can reach me at 773-403-0436. That is my direct contact number. You will not get a voice recording unless I do not answer the phone. Craig, you are not waiting on your call back because I speak to you all the time. I'm waiting on my call back from Christmas, right? Um, so reach out to me. I love what I do. It was a pleasure speaking to you guys. I was really excited to join. I love it when people ask me to speak. Brandon, I made a post and I said this was even more special because this was grown men growing men, and you guys had a lady speaking, right? So that meant a lot to me that I was able to come and educate my men on here. Hopefully somebody is able to take something from it, even if it's only one person. That means that I impacted not only a family, but hopefully a few generations to come. Okay. So, Josh and Brandon, I will be sitting down with you going over all of your insurance coverage and needs. Brandon,
All right.
I just talked to you, so you don't count. But
That's phenomenal. So, yeah, with that being said, thank you, Carolyn. We will love to have you back very, very soon, and kind of keep this thing going. And with that being said, I'll give it to Joshua Cotton and let our founder close us out.
Yeah, we really appreciate you coming on and spending time with us. I personally have insurance, but like you said, it's never a time when you have enough. Just knowing that you're properly insured is our whole purpose. And we want to make sure each and every one of you all that chime in today get an opportunity. If you need to reach out to her, her information is on the screen. You can let us know if you have any other questions, or let her know in this chat down there at the bottom, or reach out to her. Do you have an email that you have as well?
I do. So my email is going to be, it's kind of long, so I'm going to go back, guys, so that you can copy it down. So this is my email address. Is going to be my first and last name, Carolyn George at lloydagencies.com. I gave you guys my cell phone number. That address is actually my office address, but due to the pandemic, everybody's pretty much working from home. But if you want to send me anything, that's the address to do so. If you leave a voicemail in my office, it would come directly to me. I return your voicemail usually within 24 hours. It's better to reach me on my cell because that is always with me. Again, if I don't answer, feel free to send me a text message. I respond to text within the hour. Okay. And if you text me, please include your name and how you got my contact information. I've been in this for 4 years, so sometimes I do get random phone calls, but definitely feel free to reach out to me if you guys have any other questions.
Awesome.
And with that, we want to thank you all again for chiming in tonight. God bless and have a good day.
All right.
All right, guys, we are good.